Imagine transforming your trading by mastering the art of self-control. In this video, I'm going to share with you some of the top strategies to master your emotions and to gain self-control so that you can get better results as a trader and you can increase your profitability. And this is not only going to have an impact on your profitability as a trader, but it's also going to have an impact on how you feel day to day, stopping your trading negatively affecting your business, your relationships, your family time, etc., etc. So without further ado, let's get into these top strategies. Now, strategy number one is you have to understand and you have to learn what your emotional triggers are. So when we talk about emotional triggers, it's about the specific situations in the market or the specific things that happen that you find commonly trigger you into certain psychological patterns. For example, I've worked with many students one-on-one, many of my clients, they have a certain trigger. I was working with a lady recently who had a certain trigger after she experienced 3 losses in a row, whether that put her into drawdown or not. After the third loss, the fourth loss was what triggered a very strong emotional response where she had this avoidance and this scarcity mindset. And she went into this fear-based mindset where she struggled to stick to a plan. So by having that understanding and that awareness of what triggered her, we could go in there and we could put strategies in place to manage that. And we could put a drawdown protocol where we scaled the risk down and we minimize risk closer to that third loss so that there wasn't as strong of an emotional burden in that particular situation. There wasn't as strong of a fear, and therefore her processes could take over. Her prefrontal cortex had more control in those moments. So when you understand what your triggers are, you can then put things in place to manage your triggers. So what I would be doing if I was you watching this video and you really want to gain emotional control in the markets is I would be bringing up my last month's worth of trading data or your review, your self-review, and going through your last month of self-review, even 3 months, and understanding what are the patterns in your trading, what are the patterns in your behavior. Okay, maybe there were certain trades close to the weekend on Friday where you took a loss and that really triggered you. And maybe you have a certain trigger when it comes to, and triggers don't only have to do with losing, maybe there's a certain trigger that when it comes to Friday, you go into this scarcity mindset, this fear-based mindset where you have to trade on a Friday because you don't want to not trade that week or you don't want to have to wait till Monday to have to make money. So you will understand your emotional triggers, but also we can put / your emotional patterns and your behavioral patterns, because once you understand those, once you understand what your patterns and your triggers are, you can then put processes in place to mitigate them. So there are 2 components. Let's elaborate on this even more. There are 2 components we can speak about. The first thing are the negative emotional triggers. The triggers that you find put you into a fear-based mindset and stimulate and trigger a mindset that isn't productive for your trading. Maybe this happens after a loss. Maybe this happens after a certain amount of losses. Maybe this happens after you miss a position. Maybe this happens at certain times throughout the week or certain time zones in your trading session. It's about understanding these patterns. And the way you're able to do that is by reviewing your personal review and your trading data to find what those patterns and triggers are. Now, there are also positive triggers. There are also situations as a trader that put you into a really great mindset of being process-based. And there are certain things that you do and there are certain behaviors that have a positive effect on your trading. And what you want to do is by going through your review, you want to identify those as well. You want to have an understanding of what triggers you positively and what triggers you negatively, and what patterns are constructive and what patterns are destructive. And you want to learn to maximize and leverage the patterns that work. And you want to learn to start to phase out the patterns that don't, or override or rewrite the patterns that don't. So if you're coming and you're finding, all right, there are 2 specific triggers that are negative in my trading, I'd be writing those down, getting as specific with those as possible, and then asking myself the question, what can I do? What action steps can I do to manage this or to mitigate these? For example, with the lady I was working one-on-one in coaching, we put a drawdown protocol so that the losses weren't as significant closer to that third loss. And that the next trade they would take, there wouldn't be this, such a strong fear-based mindset of taking the next trade. Now, statistically, that may not be the wisest approach, but because we know that how she would react if there was another loss, right? And they would go on this spiral this negative spiral, because we knew that was her behavioral pattern, then that rule made sense. So you want to identify what negative triggers you have, and then identify what action steps you can put in place to mitigate those, as well as identify what positive triggers you have and identify what action steps you can do to maximize these and do these more often and put yourself in a position and situation where you're maximizing those particular patterns that work. Okay? Very, very important. Understand your emotional triggers. Then you also want to understand that you as a human being have two brains or two parts to your brain. You've got a survival brain and you've also got a thrival brain. Now, your survival brain is directly linked with your amygdala, your reactive part of your brain, and this part of the brain wants to keep you alive. It was very, very necessary thousands of years ago, and it's necessary when you're in life-threatening situations nowadays, but it's not all that effective when you're trading, okay? And you've also got the thrival part of your brain, which is the prefrontal cortex. This is the part of your brain that's responsible for making wise decisions according to a process or a plan. Now, every single trader would have experienced trading from these two different types of brains. The survival brain, the amygdala, is when you get triggered. You have your emotional triggers and you find yourself getting red hot, losing control, making decisions without thinking through those decisions first. And you also would have experienced trading from your thrival part of your brain, where the market presents you an opportunity, you have a look at that opportunity, you have a look, all right, does this align with my plan? Then you execute if you don't. So every trader would have experienced these two types of brains. Now, what's important is, again, this ties in and all these principles will tie in together. What's important is understanding what can you do to quiet down the survival part of your brain and put the thrival part of your brain in place. Now, it's yes about understanding your triggers and your patterns and maximizing the triggers and patterns that work and minimizing the triggers and patterns that don't. But there are also two very essential things every trader needs to do to be able to manage the survival part and put the thrival part in place. The first one is having a clear mechanical trading plan. And what I mean by a clear mechanical trading plan is a trading plan that lays out exactly what you're going to do in every part of your trading workflow. For example, what do you look for on the higher time frame to know that that's a good area of value to look for a particular entry in that area? Then, once price shows that it's in that area and those criteria have been met, what do you look for on the lower time frame to give you an indication that it's time to take a trade? And then how much do you risk on that trade? And then where do you put your stop loss initially? Where do you trail your stop, or when do you trail your stop loss to break even if you do? Where do you say take profits, or do you trail your stop loss to lock in profits? It's about identifying each of those components beforehand and having tested those to understand that each of those actions has a proven edge and that they're proven to be profitable based on data, and then putting that into a mechanical system, a strategy that you can replicate. That will significantly increase the probability of quieting down the amygdala, the survival part of your brain, and putting the prefrontal cortex, the thrival part of your brain, in charge. Now, the reason it does that is because the amygdala gets stimulated when it's overwhelmed. When there are an enormous amount of decisions to make, it perceives it as a threat and it gets confused, it gets overwhelmed, and your amygdala is more likely to get fired up. Whereas if you have a clear set of rules, a structure, a strategy that you can follow step by step, then there's only a few simple decisions you have to make every trading day, increasing the probability of thriving as a trader. Now, the second thing you want to be doing, and by the way, I've got a free template in the description called my 6-figure trading plan template. This is a free template that you can download, linked in the description, which is going to overlay exactly how I tell my 6-figure students to structure their trading plan and each of the components that you need in your trading plan to ensure that you can be successful. So if you don't already have a clear trading plan or your trading plan isn't working, download the template I have in the description. It's free, and use it, fill it in, and I guarantee it's going to make a difference in your trading. The second thing is to use the Bulletproof Your Mindset tool. This, again, is a free tool linked in the description that if you don't already have, make sure you download it. And this tool is going to help you identify let's use a bit of an analogy here. Let's imagine you have a monkey, which is literally what your amygdala and your survival brain can be like to. A monkey, something that's out of control, something that doesn't have a governing function that's controlling it, and or a part of the brain that's advanced and developed. So if you dangle a banana in front of the monkey's face and you're dangling a carrot, so to speak, and then you're probing that monkey and you're irritating it with the banana, what you're doing is you're activating the monkey. The monkey's getting crazier and crazier because it wants the banana. So too, when you project and create expectations in your mind, these positive ideas and these positive benefits that you think you're going to get from a trade, and you dangle those in front of yourself, you're going to activate your amygdala. So what's very important is to identify any expectations you're creating in your mind about the outcome of a trade and grounding those quickly. And the way you do this is by using the Bulletproof Your Mindset tool. And this Bulletproof Your Mindset tool, again, it's a free tool in the description. And what it does is it helps you identify all the very quiet, subconscious, unrealistic expectations that you're projecting onto the market, and almost like a carrot or a banana you're dangling in front of yourself, and you're activating the amygdala, you're activating the survival part of your brain. And when you do that, you're not going to stick to your trading plan. You're going to be trading based on greed and trying to seek after those expectations and those benefits, as opposed to sticking to your proven process. And once you have a proven process as a trader, you need to stick to it. That's all you need to do. Now, the third part of mastering emotional control is understanding fear and greed. Fear and greed are the two emotions that are going to take you away from consistent profitability. After you have a trading plan and a proven edge, your job as a trader is to stick to it and to consistently execute on it. However, if you're in a state of fear and you've taken a few losses and you beat yourself up and you're in this state of shame and fear, then what's going to happen is when the market presents another opportunity to you, you're not going to act because you're too scared to act. You're too scared to execute. Okay? And you're not going to stick to your trading plan in that situation. Whereas also, if you're in a state of greed and self-exaggeration and pride, what's going to happen is you're going to create all these ideas and expectations in your mind, in the amygdala, about what you think the market's going to give you on that particular trade, all the things you can get from the market, and you're going to project those expectations onto the market. You're not going to stick to your trading plan. You're not going to listen to the market. You're just going to try and take from the market when the market's not ready to be taken from. And in both fear and greed, you're not sticking to your trading plan. In both fear and greed, you're not listening to the market. And in both fear and greed, you cannot have consistent profitability. Consistent profitability only comes when you learn to self-equilibrate, and when you're in a pride state, humble yourself, and when you're in a shame, fear state, lift yourself so that you can stick to your trading plan. When the market presents an opportunity, you're listening to the market. If it aligns with your trading plan, you execute. That's that true state of self-equilibration that you can only build consistent profitability in. So whenever you're in a state of pride, this self-exaggerated state, what I encourage you to do, and this happens after a winning streak, by the way, this is what the boom and bust cycle is. You go into pride after winning, boom, and then you project onto the market's not ready to listen to your ideas, you force trade, you take losses, you go into the bust cycle. And then you go so far in the bust cycle that you eventually get your shit together, you only take high probability setups according to your plan, and then you go back into the boom. And the boom and bust cycle repeats. So whenever you're in a state of pride or greed, self-exaggeration, you have to learn how to humble and ground yourself. You have to learn to remind yourself of your faults, your drawbacks, what you've overlooked, the risks, the disservices in the market, and you have to learn to humble yourself. Okay? Because if you don't learn how to humble yourself as a trader and get back to your trading plan, then the market's going to do it for you through losses. Okay? This is much cheaper to do it yourself. Then, whenever you're in a state of shame or fear, you have to remind yourself of, you're not so bad after all, and you have to lift yourself and remind yourself of all the things you've done well and bring yourself back to that state of equilibrium. So whenever you go into fear or greed, it's about rebalancing and re-equilibrating your mind so that you can see the market clearly, listen to the market, and stick to your trading plan and your processes. Step 4 strategy 4 of self-control as a trader is self-equilibrating techniques. Now, the two best self-equilibrating techniques are the two I teach in the 12-week program in week 5 and elaborate on in extensive detail in the 12-week program. And those are the Bulletproof Your Mindset tool and the Transcending Judgment tool. I've sort of outlined the overarching principle of the Transcending Judgment tool here. It's about reminding yourself and asking good questions to self-equilibrate. And those are the two cornerstones that I see very successful traders have. These are the two cornerstones that I give to my 6-figure traders that end up becoming 7-figure traders and doing very, very well, because these are two tools that you can replicate and you can do over and over and there are proven science to bring yourself back to that state of equilibrium. There are also a couple more techniques that you can use. So as well as using this and downloading the Bulletproof Your Mindset tool and checking out the 12-week program, you may also want to look into meditation. You may also want to look into doing some form of exercise and eating well and deep breathing. And by the way, I mentioned all these principles tied together. When you self-equilibrate, you manage fear and greed, you quiet down the survival part of your brain, you activate the thrival part of your brain, you reduce your emotional triggers, so they're all tied together. Now, trading very much is, and trading mindset is, it's a holistic game. You have to be exercising and eating well, because if you're not fit yourself and you're lacking on energy and you're feeling like shit, you're going to more likely activate the survival part of your brain. And you're going to be more likely to go on greed and want to consume more and get gluttonous. Okay, so meditation's a great form of self-equilibration. You can do a 10-minute meditation before you trade. You can do a 10-minute meditation after you trade. You can go for a run before or after. You can lift some weights. Everybody knows that after a good gym session, you feel really good. You've almost equilibrated your mind and you feel good. You feel energized. You feel recharged. You can also do good deep breathing. And that also helps equilibrate the mind. So these are all techniques or things you can put in your toolkit to help you as a trader, and encourage you to experiment with all of them. Now, the fifth strategy here is to transition from outcome-based thinking to process-based thinking. There are far too many traders who are caught in this mentality of, I want to get this car, I want to get this watch, I want to get this materialistic thing, this outcome, or I want to trade full time, or I want to make $10,000 a month, or I want to go travel. These are all outcome-based ideas or goals. None of these ideas or goals specifically will help you become a profitable trader. What helps you become a profitable trader is having a proven edge, putting that edge into a mechanical trading plan, mastering your psychology so you can stick to your trading plan, then consistently executing on your trading plan. Now, these outcomes can be a good source of motivation. They can be a good source of drive to help you get up and do those action steps. But the truth is, when you're trading and when you're focusing on executing on your trading plan, these ideas don't need to be in your mind. Okay, you can have a master plan or a goal booklet where you have all these outcomes written in, but then underneath each of those outcomes, you want to break down the specific process, the specific strategy, the specific action steps that are going to help you accomplish that and achieve that outcome. So when we talk about your goals, you may set an outcome-based goal initially, but then you want to convert that into the specific strategy, the specific action steps, the specific process to actually help you achieve that goal. And when you talk about your trading, you don't want to focus on the outcome of the trade. The outcome of the trade on the individual trade is unpredictable. Nobody knows what it's going to be. What you want to focus on rather is, now that you have a trading plan, is listening to the market. Is the market presenting an opportunity that aligns with my trading plan? If yes, execute. That's when you transition from outcome-based thinking to process-based thinking. You lower your emotional state because you're not having any expectations on the outcome. You increase the probability of sticking to your trading plan and building consistent profitability because you don't have any expectations that take you away from your trading plan. And you actually build the profitability that you desire, and you actually get the outcome, but you're not focused on it. You're focused on the proven processes that will help you get there. Now, the best tools, again, to reiterate, to help you go from outcome-based thinking to process-based thinking is the Bulletproof Your Mindset tool. In fact, that tool was actually designed by me to help traders transition from outcome-based thinking to process-based thinking. And it's the mindset that I saw the most successful traders embody. So I created a tool to help facilitate that process. It's a free link in the description. And the other one here is your trading plan template, which you've all already downloaded. That is going to help you create the process that's going to help you get your goals and the outcome. Okay, so the outcome and the goal is important to understand, and you may review that every week or so, but day to day what you're focused on is the execution of the proven process. That's what ultimately gets you the outcome. Now, strategy 6 to self-control in the markets and mastering your emotional state is this idea of building resilience. Now, you significantly increase your resilience as a trader when you don't hold on to expectations on the outcome. What a lot of traders do is they have this idea, let's say this is a win, this is a loss, and this is a pendulum. They have this positive idea that this individual trade is going to be a win. Now, the individual trade is unknown. The individual trade could be profitable, it could be a loss, it could be a win or a loss. There are just too many factors influencing the price and the financial markets at any one point in time for any individual to know what's going to happen on this one individual trade. Now, you can approximate an outcome over a large sample space of trades, but on this individual trade, nobody knows. So when you have an expectation that it's going to be a win and it's a loss, then what's going to happen is, because you've set this idea in your mind of all this pleasure on the win, all this positive on the win, all the benefit on the win, then by law of contrast, you associate negative and pain to the opposite, which is losing. Then if you have the expectation that it's going to be a positive win and it's not, based on probabilities, you experience pain. And in that moment, you're not resilient. Whereas if you're transcended outcome-based thinking and you're not thinking about win or loss in that individual trade, you're thinking about process-based thinking, adhering to my trading plan on this individual trade. I know I made the right decision because I've adhered to my trading plan, and that's the true expectation in your mind on a deep level. Then you significantly increase your resilience, because win or loss, you're unaffected. You stuck to your trading plan. So that's how you build resilience as a trader, by not setting expectations in the outcome and transitioning from outcome-based to process-based. This is done by the use of the Bulletproof Your Mindset tool, free link in the description. Now, strategy 6 is you need to be applying the principles daily. And there are many traders who think that, I could use this tool once, or I could watch one YouTube video, or I could just understand the principle, intellectualize the principle, and then get the results from it. But unfortunately, that's not how it works. So you will see a common theme in this video. You will see a common theme throughout all my YouTube videos and all my teachings, that it's about understanding your expectations. It's about developing proven processes and a trading plan. And it's about getting out of these extreme emotional states of fear and greed and back to a state of self-equilibration, back to a state of balance in your mind, so that you can see the market clearly and you can trade your trading plan clearly. These are the overarching principles. Again, knowing the principles isn't going to do anything. Make sure you implement the tools, the Bulletproof Your Mindset tool, the trading plan tool, and then when you're ready for it, you check out the 12-week program, which is going to completely blow your mind in terms of what I teach there and all the tools and the application there. But it's now about daily application. Just like I was talking about the gym before, you can't just know I have to lift weights and then expect to build muscle. Or I have to eat under 2,500 calories and not do it, but just know it and then expect to lose fat. You have to do the daily application. You have to go in there and do the exercises and do the work if you're going to reap the rewards. Okay? So these are 7 strategies to building mental balance, to building mental fortitude, to building mental resilience, call it what you want. But each of these strategies are going to help you in your trading to lower the negative emotions that influence your trading, that influence your life. And each of these strategies are going to help you build consistent profitability, because each of these strategies are going to help you stick to your trading plan. And if you have a proven edge, if you have a proven strategy, that's ultimately what's going to help you get consistent profitability. So if you found value in this video, make sure you like, comment, make sure you subscribe, and share this video with your trading communities and the traders that you know will get value from it. And thank you for watching to the end. I look forward to seeing all of you in the next video.